Selling a house in Lodi right now feels like walking a tightrope. One wrong step and your payout disappears. If you're putting your property on the market this May, your ultimate goal is simple. You want to walk away with the highest possible net return. Because of that, it is incredibly tempting to list your property slightly above market value, just to see if someone bites. The logic makes sense on paper. You want to build in a buffer so you have plenty of room to negotiate down later. But treating your most valuable asset like a science experiment is the quickest way to kill your final sale price. You have to choose between two paths, protecting a theoretical profit margin or building real momentum. Let's look at two strategies sellers are using right now. The aspirational strategy sets a price based on emotional attachment or the dollar amount you want. The momentum strategy sets a price governed entirely by market realities, giving up the high initial sticker price. We are going to look at actual Lodi data to see which of these paths actually puts more money in your pocket. The goal of pricing isn't to start with the highest possible number. The goal is to engineer the exact conditions that force buyers to compete. Let's see what happens when you pick a number based on what you want to net. This graphic breaks down the immediate market risks. Look at the left side. When you overprice, buyers skip the listing. You lose early momentum, and the house just sits. After a few weeks, you hit the neighborhood outpricing phase. Your overpriced listing becomes a decoy. Buyers look at your home, compare it to accurately priced houses down the street, and buy the neighbor's house instead. You get the illusion of a high valuation, but the reality is you're actively helping your neighbors sell faster while you get stuck. Now let's look at the alternative, executing a data-driven strategy from day one. This section shows what actual pricing relies on. It is not based on what you want to make or what your neighbor thinks. True pricing is governed by three strict data points: recent comparable sales, active competition, and buyer demand. When you align your price with those three pillars, you send a clear signal of undeniable value to the active buyer pool. By dropping the aspirational price tag, you align with market reality. You stop hoping for the right buyer and start predicting buyer behavior. You might be thinking that your specific neighborhood in Lodi is unique and doesn't follow these general rules. You're partially right. Lodi has micro market price sensitivity. Different neighborhoods punish pricing errors differently. This map section breaks down local insights. In newer build areas like Rosegate, homes are moving faster. These pockets can sometimes absorb a slight pricing error without completely stalling. But older areas are highly price sensitive. Overpricing by a small margin in older neighborhoods carries a severe penalty, adding weeks or even months to your total days on the market. Generic real estate advice ignores this. It doesn't account for how harshly these specific Lodi micro market penalize emotional pricing. Let's look at the actual sequence of events when you follow the data and price correctly for your specific micro market. On day one, you hit the market at the right price point. That immediate perception of value generates active showings and heavy foot traffic right out of the gate. That concentrated foot traffic translates directly into strong, measurable buyer interest. When buyers see other buyers interested in the same house, it creates competitive momentum, triggering multiple offers. Pricing correctly doesn't mean you are leaving money on the table. It is the specific mechanism you use to build a bidding environment and drive your final payout up. Let's put all this market data into a single framework so you can weigh your options. This chart maps out exactly how your time on the market impacts your final sale price. If you choose aspirational pricing, you end up here. High days on market, forcing you into price drops that lead to a low final sale price. If you choose market value, you end up here. Low days on market, driving competition that secures a high final sale price. In Lodi right now, pricing right from day one is the only mathematically proven way to create the momentum you need for a successful sale. If your primary goal is to validate what you think your home is worth, or if you want to treat the sale like an experiment to see what happens, be prepared. Testing the market guarantees a stagnant listing, which inevitably leads to painful price drops later on. But if your primary goal is actual financial maximization and efficiency, you need to let go of the need for a negotiation buffer. Commit to a price that is purely based on active comparable sales. Once you hit the market, step out of the way. Let the resulting competitive momentum handle the negotiations for you. Actual momentum will always create better net financial results than artificial margin padding.